Martin from Hedging, the channel for learning about trading and investing. Welcome to Markets Next Week, weekly stock market analysis show, where we look at the technical charts and we try to understand what exactly happened in the market during the previous week and then plan for a better trade for the upcoming week. But starting from tomorrow, July 29th, Monday 2024. Let's get to see what happened. So we had a week that had the first union budget after a newly formed government is coming, and naturally it was very volatile week, and market mildly reacted, and on Friday and Thursday it completely recovered to surprise the market considering the Banknifty budget. So the budget was not friendly for investors and traders for several reasons, like increased the transaction charges of trading and increased short-term capital gains and long-term capital gains, and cutting short on the indexation benefits on the real estate and gold, custom duty down, and all of these were not that positive for the investors and traders in a way. Although good policy changes on angel tax cut and then improving all the skilling and all that is good, is taken positively by the industry and the business community, but for the trading in the stock markets it was not that great considering the policies. But surprisingly, as it used to do previously, the market did not react badly. It in fact went on to make new all-time high. That's what I see here. So the weekly and the daily charts of the Nifty is what you see here. The market has been on a relentless rally since a very long time. It's very much evident, and you can also see that there is a narrowing wedge there. It's still not at the peak in the case of Nifty, and price could still hover around this very narrow range and head further high also. But look at what is happening on the daily candles on the right stick for the Nifty. It is having an ascending wedge, it is narrowing much closer, and there could be some turbulence that can pull it back for a correction, but market is definitely overheated for sure, and the short term especially. Right, so that's very much clear. But look at the Friday's candlestick. It's ferociously bullish. It's extremely bullish breakout. In 2 days it recovered complete correction of 3% on the Nifty and 5% on 3% more, 3% on the Nifty correction completely recovered despite all the negative things that the media and others talking about with respect to the stock market. Despite that, the market never listened to that and then continued to make an all-time high. And weekly, if you see it hit the top of the ascending wedge and then has made a bullish candle, as we'll see the candlesticks later. But look at the scenario on the Banknifty. Banknifty also having a ascending wedge, and it is narrowed down much more, indicating that there is a potential that the fall can come in. Banknifty, contrary to the Nifty, has closed red following the budget volatility. Even though the daily you can see that it had formed a very good engulfing wide range, extremely bullish candle, but it still closed below the 20 exponential moving average and still closed negative on a week-to-week basis. And if you look at the daily channels, you can see that the Banknifty has hit the top and then corrected more than 5%, 5.5% correction. The max correction that was done earlier is 10 to 11%. This ferocious rally from 2020 onwards for the last 4 years. The maximum correction is only 10 or 11% that has come in the last 1 year at least. And it is at the top of it, ascending wedge, and so that's how we have to look at it. So what we make out is very clear, right? Market is heated up. It's pretty due for a correction on Banknifty for sure, and it is due for correction on the Nifty as well. Although as a liquid, just some more space to move and stay there if it wants to. But it's an all-time high that is made despite all this. That's the beauty. Right, market is non-stop rallying is what we could summarize it. Despite all the negative news flow that came in, and the market is heated up at the top. So candlesticks and patterns, that's what we modeled rested in the technical chart. So it's a bullish weekly and daily candlestick on the Nifty. Absolutely bullish. But Banknifty, the contrary, is bullish and it's wide range engulfing in the short term, but on the medium term, the weekly candles, it's bearish. And you have a rounding pattern, which is bullish. Breakout possibilities there on the Nifty daily. You've seen that, right? It's rounding pattern, right? And you can break out from here. Let us take a V-shaped move. That way it's rounding. And there's a change in polarity, CIP bounce that's seen on the Nifty daily, Banknifty. So change in polarity bounce is for the previous supports, previous resistance zone from where breakout might have happened, could act as a support now, and then a bounce happens. And CIP bounce did happen, and it can go further up there. So that's why the change in polarity bounce in the Banknifty is again bullish. Rounding pattern on the Nifty daily short term is bullish. Nifty is still above the 20 expression moving average is once again bullish, and the fact that the bullish biased expansion the upside on the Nifty Bollinger Bands is once again bullish. But there is bearish bias consolidation that's happening in the Banknifty and the contrary, matching with the bearish weekly candlesticks on the Banknifty. So it's a mixed bag there, some contradiction between Nifty and the Banknifty, a weaker Banknifty. That's what the candlesticks and the patterns are showing. But there is every chance that Nifty can break out from here, considering the candlesticks and patterns. Look at the candlestick. See, this is the candle that's formed. It's not a hammer or wide body. It goes up from the bottom. Is what the wick size is indicating. Same recovery on the Friday is indicated on the Banknifty on the right side, but the close was negative. Banknifty could not completely recover the correction, deeper correction of 5% that happened from the top. But Nifty has done that completely and made a new all-time high also. So bullish and bearish weekly candles. But absolute bullish candles of similar nature, extremely bullish, wide range bullish candlestick patterns on Nifty and the Banknifty on Friday. No doubt about that. Right? So this is the rounding pattern that we're talking about in Nifty. It's an all-time high. It's a breakout zone. Any move from here could move as much as this 1,000 points it can move if it works out. And Banknifty is going to engulf, it's completely engulfed this candle. So extreme bullish on short term and contradicting moves as per the candlestick on Nifty and the Banknifty. So Bollinger Bands, we already discussed that. It's bearish bias contraction of the Banknifty and bullish expansion on the Nifty, indicating more further up moves. Let's study the momentum of the trend. So momentum is bullish for sure on both time frames of the Nifty. On the medium term, we can see that the Banknifty is also bullish, but on the short term, Banknifty is falling to sideways and taking a support and trying to bounce up from there. Just taking a support of the RSI 60 and then trying to bounce up from there. So the momentum is sideways in the Banknifty in the short term, but otherwise everything else is bullish. This is a summary of what we are talking about. When it comes to the trend indicator ADX, we have trouble. We're still in the bear zones. We're still in the bear zones where the trend has not completely changed. We're just bullish on the Nifty on the short term, but that bullishness is also the falling strength but otherwise we are bearish with falling strength, but bearish in the negative zones. DMI negative as per the ADX20 indicator. So the momentum had gone up, but the trend is yet to completely change, especially in the case of Banknifty. And the chart that you see here is that the VIX has cooled off when the Nifty is broken out. It's complete recovery has happened. It just crashed 17% last week after the budget. So obviously this cool off was expected because it risen to these 15 or above levels. Huge spike naturally comes in before a major event that happened, and then it cooled off and crashed to 12.75. So VIX is not that dangerous. There's no imminent threat or fear. Indication is less comparatively. It's low volatility, but last week was an exception, and the spike was for obvious reasons. Moving ahead, if you try to understand the open interest, and this is regard to the options on the Nifty and the Banknifty. So for the futures open interest, if you study, it's long built up on both from Friday, obviously. And for the July 31st and the August 1st on Nifty, these two weekly expiries, if you see, the put call ratios are 1.28, which is extremely bullish in the case of Nifty, and 0.86, it's actually bearish in the case of Banknifty when it comes to the put call ratio, total puts and the calls ratio. If you compare, that's also, it's again as indicated in the charts. Here also we have a contradiction between Nifty and the Banknifty, and Nifty is extremely bullish and Banknifty is lagging behind on the bullishness. Right. Now you can find the support and resistance levels in two ways. One is from the technical charts. We'll do that. And then another way is to study the open interest. So open interest data is showing that we have a very tight range of high support coming in at 24,500 and highest resistance at 25,000, where the highest call writing is seen. So 24,500, 25,000 is where the range is. Second highest support resistance is at 24,400 and 24,500. Right? Banknifty is showing 2,000 point range between the highest put and call writing. 50,000 and 52,000 is what it's seen. Second highest at 51,000 and 52,500 where the highest put and second highest put and call writing is seen. So that's one way of finding out the risk. The second way would be to look at the charts. So we have an all-time high. So what I did is that there was a Fibonacci extension that is drawn from this previous swing low to this swing low. Fibonacci extension shows that market will go from 24,870. That's 24,900 would be major resistance zone, because that close above that would confirm there is a breakout or not. So once that is taken out, 25,000 big rounding number resistance, and then 25,250 is where the 61.8 Fibonacci extension is going to come. That's the level. It's on charted territories. We never know how far it goes, but remember we're in the top of a trend line channel. We are at breakout zone. We are at all-time high. Market is heated up. Fibonacci 61.8 can be once again a big resistance to take out. 25,000 is a big rounding number. So be cautious, but we know the levels where we have to be cautious. 24,900, 25,000, 25,250. Right. And downside, the supports would come in obviously at 24,500. It's a rounding number, that's why. And it's also a 20 exponential moving average. No, 20 Fibonacci extension 23 basically. It's in confluence with 24,350 that's coming very close to the expansion moving average 20. So 24,500, 24,350, these are all very good supports, and then finally 24,000, which is a previous swing low as well as a big rounding number. So those are the levels on the Nifty. Banknifty, obviously resistance will come in at the 50 Fibonacci extension levels, which is in confluence with the 50.850, which has got the expansion moving average 20, which will act as a resistance, and then after that 52,750 would have that previous resistance zone, and then after that 53,350 is all-time high where the resistance is there. That's above the 61.8, so it's tough to break that, but it has to be broken for the Nifty to go for the room. So it's retracing, and it has taken a support at the 38.2 Fibonacci extension, and then when it bounce up, right? So levels up would be 51,850, 52,850, 53,000. Immediate resistance and supports 5,400, 50,000, and 49,650. Right? On the Banknifty we're talking about, because 49,650 is because it's a 100 exponential moving average, 50,000 because it's a big rounding number, and 5,400 because it is it's a 50% Fibonacci extension, right? So that's 5,400 is because it's 38.3 Fibonacci retracement. So that's how it is. Making note of these levels, study the levels, so you can see that it's more or less matching with what the OI is showing, but the OI is evolving. It is another 4 days, so keep on. It can change, but what is on the charts can be more reliable because of the different parameters like the exponential moving averages, Fibonacci extensions, Fibonacci retracements, previous support resistances, all of these different parameters that we consider technical charts to derive that. But open interest can be more volatile, but more or less it's matching with that, you can say, in order to figure out support and resistance levels. Let's move on to see how the different industry sectors performed last week. Yes, because all the sectors are up except for a mild dip in the realty sector. Rest all broke out and made big moves. 26.5%, sorry, 2.6% for the breakout for the IT, which did extremely well. Nearly 2% upon the metal, auto making ferocious 5.2, absolutely bullish. 2.7 on FMCG and 5.8. So it was the auto and the pharma that is broken. Pharma had some policy related PLI schemes or something that was positive. That's why this breakout is in auto 5.2%. The 5% plus and nearly 6% on the pharma is the big breakout that has happened. Others, IT is extremely doing good. FMCG also because of the consumption, and the IT is moving up, it's going good. So reality has got hit. But if you consider all, except the metal and the reality, all the sectors are ready to take long versions as of now. So across the sector bullishness, you can see all those on all the sector indices. Nifty, you can see that it's breaking out of cup and handle, extremely bullish momentum and trend. This is breaking out of inverted head and shoulder, extremely bullish. Some correction is happening in the case of metal. But it's post that after taking a support near the RSI 60 and the medium term. Auto is at the top. Had some consolidation. Now it's again trying to break out. Momentum is rising up. Absolutely bullish momentum and trend. Pharma is breaking out of the flag. Absolutely bullish momentum and trend. FMCG is at the top, very peak, big breakout, momentum, trend both absolutely on the top. Reality index heated up, some retracement, momentum is still bullish and momentum. So across sector indices, except for the reality and metal, more or less are ready to take long positions. Now we try to understand the heavyweight stocks that contribute maximum to the index. HDFC Bank was a disappointment, but last week it shows them green. Is attempting to climb back in the bull zones after having slipped in the sideways slightly. On the medium term, momentum and the trend looks good. SIPC once again trying to, after the big sell-off that happened following the results, when it made new all-time highs and then retraced, it seems like there's some attempt to further move from there or consolidate at least. If this is moving up, then bank index can rock. Reliance Industries is doing some corrections and forming a hammer pattern, but yeah, more trend is all bullish. ICICI Bank it's also going through some corrections because the banking index is not performing it, and it is at the top of the trend line channel and then showing some retracement. Momentum is still bullish, so momentum is bullish on all these major three players of Reliance, ICICI Bank and HDFC Bank. And when it comes to the IT stocks, the Infosys and the TCS, it's breakout, relentless breakouts and new all-time highs. It's a rounding pattern breakout, and Infosys is extremely bullish. TCS is propping up from that flat pattern once again. Momentum and the trend both are bullish. Kotak Bank, as usual, it is consolidating the sideways momentum. And ITC, the big breakout to all-time highs once again. 500 plus is what ITC is on. Momentum and the trend absolutely bullish. Big volumes, price pattern, rounding pattern indicates that more breakouts up to 550 can happen, or more. Up to 600 it can go as per the rounding patterns of width. Right. So absolute bullishness can be seen in ITC, IT stocks, Nifty and TCS, and the remaining Reliance, ICICI and HDFC Bank. And if there is slight breakout that happens from HDFC Bank, then markets can easily go to 30,000 if the HDFC breaks out finally. But you never know when that happens. It has been trying and failing every time it reaches the all-time high. So that's what is holding back the market. HDFC Bank, after the consolidation of the HDFC Bank and HDFC Finance, this is what is seen. So heavyweight stocks are all doing good, except for the Kodak, which always consolidate. All of them seems to be having enough strength. When you consider the broader market, the mid cap and the small cap both are at all-time highs, very close to that, and are rocking and the momentum and the trend in both zones for sure. We hear that if you try to understand the institutional participation of Fyers or net sellers, there are some buyers of 8,000 crores and more, and net traders, they're positive. So it's a retail money or the domestic institutional money that is taking the market up and up last week, that's for sure. Keep that in mind, it's not the foreign money yet. So net longs, the idea is on the derivatives also moved down, I can say. So the Fyers are long on the futures, and it is in the case of options, and that's retailers are bearish on futures and options both. So the retailers are bearish as per the Friday's move. On the afternoon, we need to talk about the afternoon. Alright, so institutional participation from foreign institutions are much required. Their selling is a worry. Keep that in mind. Let's move on to understand the global markets, the currencies and the global commodities. Dollar, flattish red, sideways, not 4.3. Dollar is, you see the chart here, it's consolidating in that zone. Nothing is happening there. US dollar made new all-time low, means all-time high, in the sense rupee has made new all-time low. It's in that same zone, oversending bets and consolidating and doing nothing there, being controlled by central bank, obviously. Crude oil cooled off, a good crack down of another 2.8%, which is good for an oil bottom country like ours. And seems like it's having falling momentum and then turning into the bear zones once again. It is good. Crude oil is falling. Gold is in the Indian market, it crashed 7.5% fall on the custom duty. Gold has become cheaper now, but globally gold is also slightly weak today, but it is not very far from the all-time high. We're talking about the global gold, which is close negative, but indecisive. Right? Remember, it had a 26% of breakout in the gold following the inward and short breakout. Gold, if you consider the duties on the Indian price, the gold has suddenly crashed. And keep that in mind, which could negatively impact the immediate maturing of sovereign gold bonds and other things. That way, it impacted investors in a way. Moving here, if you try to understand the US markets, you have the Dow Jones, which is performed okay. He is all-time high, reading the momentum, but the other two indices, the Nasdaq 100 and S&P 500, did not do well. It did fall down with 2.5% down on Nasdaq and 0.80 down on S&P 500. So overall, you can say it's flat close, except for the Dow Jones, which managed to close flattish, less than 1% up. It's probably still bullish and falling. That's what it is. US market is tepid. We have to be cautious. That's obviously reason for that is because in another 2 days, July 31st, Fed outcome may come in. So that's the reason for the volatility, and you have to watch out for what happens there, right? Because that's some other market, the US markets, 3 indices you have to closely watch. So in a nutshell, you can see a flattish currency and retracing crude and falling gold with US markets tepid. That's what it is. We'll move to actionables on the stocks and the FNO. Stock picks, 2 of them. Emphasis is having a rounding pattern breakout at the top of the channel. Have tight stop losses. If a breakout happens from here, we can go to all-time high. So 1 issue, 2 risk reward can be taken because momentum is bullish, trend is bullish, big volumes, and channel price pattern also bullish. ICICI Prudential Life Insurance is also has the potential to break out from here. 1 issue, 2 risk reward. 1 or 2 week swing trade up can be attempted because momentum is bullish, trend is bullish. Rounding banner breakout potential is there. Have tight stop losses. Volumes are also extremely good. 2 stock picks on the long side: ICICI Prudential and Emphasis. It's an IT company. ICICI Prudential is a life insurance company. FNO strategy for the next week is a calendar bear call spread because I'm slightly bearish, but I know markets could move further up above the 25k. It's a possibility, but still I am bearish because retracement is what I'm expecting. But if a retracement comes in, I don't want to lose too much money. Maybe if further moves up and hangs on at the 25, I can make money. Risk reward is not that great, but profit is nearly 80% and a decent range also I'm getting, and that's the best thing that can be done in these volatile markets. So volatility can be beaten or taken advantage of with the help of this calendar spread, but the calendar bear call spread is what you have. It's completely hedge. You know what you will lose. Get out. Don't try to adjust. Get out before the expiry, or if it breaches the levels of 25,200. That's FNO weekly option strategy for the next week on the Nifty. Let's try to wrap up now. So we know it was a volatile week. Not too volatile as in the election, but volatile enough. Market did not retrace too much as expected, despite the poor outcomes for the investment stock market community. The market did make a surprise Friday, Thursday moves to break out and make a full recovery in the Nifty and sustained about 24,800, but banking index is kind of comparatively weaker and trying to catch up on the momentum and close red on a week-to-week basis, but did a very grand recovery on the Friday along with the Nifty index. So overall, we had a 38 to 46% of rally from the last 1 year with just 10 to 11% of correction. That's all that has happened. So let's try to put together what is in favor of the bulls and the bears, and we're just summarizing what we learned earlier. So it's a bullish momentum trend on the Nifty, change in royalty bonds potential on the Banknifty, wide range bullish candles on Friday in both indices. Nifty having a rounding pattern, creating relatively expansion moving average in Nifty, India which is cooled off. Upside expansion of the Brokerage bands on the Nifty. Sectoral indices are breaking out with ready to take long positions with momentum and the trend rising above. They are on the bull zones. Mid cap, small cap is all-time highs. Long futures, high build up, and PCR also bullish on the case of Nifty and a falling crude. What more do you need? What's in favor of the bears is that Banknifty is struggling with a sideways momentum. Sideways contraction is on the Brokerage bands on the Banknifty. Open interest on Banknifty having a bearish PCR less than 1. Magic extension is 68%. It's already on both the dice and it's extremely heated up. It's on the top of an ascending wedge pattern, and there could be a potential reverse tracement that can come in the short term. US market is under stress ahead of the July 31 volatility event, and Fyers had not been buyers last week. They are more interested in selling despite the DI money that's lifting the market. This market went volatile and reacted mildly and surprised with a full recovery on the Nifty, and bank index is yet to recover from the momentum. Trend remains on the medium-term bearishness itself. So we'll wait for the next week that crosses over. And institutional money flow from the DI is what is holding the market. Market is heated up. Substantial correction has to come in. It's casting distance away from 25k. Following that, you may increase anytime. So you look extreme cautious and have tight stop process as heavy flows on the investing will continue regardless of market moving up or down. So technically the market is heated up at the top and sustaining the case of Nifty within easy weeks and getting momentum in Nifty. So market view is technically it shows bullishness, but I'm mildly bearish because of the consolidation of all these facts. So any of this technical analysis can get screwed up if there is a major event or a black swan event that comes in. That's why there was no technical analysis from the last week, because budget event can is beyond any prediction, or market reaction can be very volatile and violent. Similarly, black swans or unexpected events can screw up all the analysis that we talked about in the last 30 minutes, right? Keep that in mind. So levels for the next week could be 24,000 to 25,200 on Nifty and 52,000 to 53,500 on the Banknifty. So 24 keeping that level and 52 keeping that level on the Banknifty could indicate another leg or continuation of the rally if that is maintained for the next week. So always hedge your positions with spreads and non-directional strategies so that you know what you lose, you'll still be in the game. You don't wipe out your capital. No, don't take overnight risk. Protect your capital. Also, you can use this strategies for hedging. Apart from the hedging purpose, you can use it for investment or get rental. Not investment. You can get rental yield or rental income by playing on the opposite side of like covered calls and all that, cash secured puts and all this. So check out the playlist for all those techniques. That's all I have. If you like the content, subscribe and then share it to friends and colleagues and put in your feedback. I'm also present in all the social media and more active on Twitter, where daily analysis controls can would be posted. If you want to subscribe, please subscribe on that. Thanks for watching. Happy trading, happy learning, happy investing. Bye bye.